What's up, millennials? Today we're going to look at the exact fair price per share of a company called Achronix. This is a company that's looking into making FPGA chips, and this company is going to be acquired by the SPAC that's currently trading under the ticker symbol ACEV. If at any moment during this video you don't really know what I'm talking about, maybe check out the full spec guide that I released a few months ago. It's going to be somewhere in the description, and today we're going to be taking a look at method number 1. Also, if you want access to the Excel sheet I'm going to be using today, you can join our Discord for free by going to nesami.com/discord. Then you can join the Discord, you can go to the SPACs channel, and there you're going to find all the documents you need. And of course, as always, don't trust me, verify me. Always check what I'm doing, always check if the calculations are actually correct. I'm just documenting my journey here on YouTube. I'm certainly not a financial advisor. So don't copy my numbers as is, but use the method, use the spreadsheet to come up with your own multiples, your own prices, and your own fair price per share. But before we dive into the evaluation, let's very briefly talk about what Achronix does exactly. You probably have heard about CPUs and GPUs. You might have also heard about ASICs or ACICs, which are sometimes or very often used actually for crypto mining, but you might not know these FPGA chips, which are field programmable gate arrays. I didn't know of these, but apparently, as we can see, the FPGA chips can combine the benefits of the CPUs, GPUs, and ASICs. And this gives you multiple benefits according to this investor presentation. For example, more flexibility, more purpose-built, and more optimized for high bandwidth and AI workloads. And there are multiple applications for these types of chips. For example, as we can see in the investor presentation, AI, machine learning, computational storage, automotive, smart NIC, and 5G, of course. And we can also see that they already have a pretty solid pipeline of more than $1 billion. And if you wonder when this merger is going to take place, we don't have a merger date just yet. Let's then look at the pro forma valuation of this company, of Achronix. As we can see, they started out trading at $10 per share, as is very common with SPACs, and they are going to have 270.3 million shares outstanding after the merger, as we can see over here. So if you combine these numbers, if you multiply these numbers, you're going to arrive at a pro forma market cap of almost $2.1 billion. And then you can also see that they are going to have $312 million in cash on their balance sheet after the merger. So if you then take that pro forma market cap, subtract the amount of net cash, then you're going to arrive at a pro forma enterprise value of almost $1.8 billion. However, if you go into something like TradingView, you can see that currently they are trading at $9.94. So that's the number you can plug in over here in your Excel sheet. And then the Excel sheet is already going to calculate the updated pro forma market cap and enterprise value for you, which in this case is going to be a little bit still less than 2.1 billion and a little bit more than 1.7 billion in enterprise value, because the price hasn't changed a lot, of course. But that is, of course, the pro forma enterprise value. We want to know what a fair enterprise value is, so we can reach a fair market cap and also a fair price per share at the end of this video. So we need two numbers for this enterprise value. And first of all, we're going to determine the enterprise value of the future, in this case in 2025. And then we're going to discount those numbers back to the present, of course, the second half of 2021. So if we do that, we can see that currently they expect to have, and of course, as I say in all my videos, all my SPAC valuation videos, that expect is a very big word, a very important word, because we just don't know if they are going to achieve this in 2025. They do have a proven track record. They already have revenue in the last couple of years, so that's pretty good to see. But they expect to have $401 million in revenue in 2025. So that's the number we are going to plug in over here in our Excel sheet, and then we're going to apply a certain range of multiples to that revenue of 2022 to arrive at a fair enterprise value in 2025. So for that range, as we can see in the investor presentation, Achronix used a fair range of multiples of 10x on the low end, 16x on the high end. So those are the two multiples you can plug in over here in your Excel sheet. And you might wonder, where do these multiples come from exactly? Well, as we can see in the investor presentation, the company Achronix compares itself to other companies, similar companies out there, like NVIDIA, like Ambarella, like AMD, and like Xilinx, for example. And we can see the EV to sales ratios over here in this investor presentation. For example, we can see that for NVIDIA, that is 17x, for Ambarella 12x, for AMD 10x more or less, and for Xilinx a little bit less than 8x. So we see see a range of multiples of 7.7x on the low end and 17.3x on the high end. So that is the reason for which they construed their range of multiples of 10x on the low end and 16x on the high end. So if you plug in these numbers in your Excel sheet, you're going to already arrive at a few numbers, because what the Excel sheet is going to do is the following. First of all, it's going to take that revenue of 2025 of $401 million, and it's going to apply that low multiple of 10x to arrive at a low enterprise value of a little bit more than $4 billion in 2025, of course. Then it's also going to take that same revenue of 401 million, apply that high multiple of 16x to arrive at a high enterprise value of a little bit more than $6.4 billion. And then you can also determine a so-called midpoint valuation, which is basically just the average between the low and the high valuation, and that is going to be $5.2 billion. But these are, of course, the numbers for 2025. We want to know what a fair price per share would be for 2021. Well, we are, of course, almost in the second half of 2021. So that means that there are 3.5 years that we need to discount from 2025 back to the second half of 2021. So that is one number we need to discount it back to the present 3.5 years. The other number we need is a discount rate. And as we have been seeing with the other SPACs, we usually use a discount rate of 20%. So that's the other number we are going to use for our Excel sheet calculation. The Excel sheet is already going to take care of the rest of the calculations for you, but I'm going to also do it manually so you can understand how this is going to work exactly. So let's pull up a calculator. Let's first bring in the low enterprise value of $4.01 billion in 2025. To discount that back to the present, we first need to divide it by 1.2. The 2 here is standing for that discount rate of 20%. And that we need to do to the power of 3.5 because of those 3.5 years back in time from 2025 back to the second half of 2021. So if you do that calculation, you're going to arrive at a current discounted enterprise value of a little bit more than $2.1 billion, which is also the number in our Excel sheet. Then if we do that exact same thing with the high valuation, we saw that the high valuation was $6.416 billion. Divided by 1.2 because of that discount rate of 20% to the power of 3.5 because of those 3.5 years back in time is going to give you a discounted enterprise value on the high end of almost $3.4 billion, which is also the number in the Excel sheet. Then you can also determine the midpoint valuation, which again is the average between the low and the high valuation, and that is going to be a little bit more than $2.7 billion. That, however, is the enterprise value. We want to know what a fair price per share is going to be. Well, first what we need to do is to take these enterprise values, add back the amount of net cash to arrive at a fair market cap. Because in the beginning of this video, we said that the difference between an equity value, so a market cap, and an enterprise value is the amount of cash they're going to have on their balance sheet. In the beginning of this video, we said that was going to be $312 million. So if we take these enterprise valuations, if we add back the amount of net cash they are going to have, then you're going to arrive at these fair market caps. So for the low end, 2.4 billion, for the midpoint valuation, 3.1 billion, and for the high valuation, 3.7 billion. Then the only thing you need to do is to take those market caps, divide them by the amount of outstanding shares after the merger, which we said in the beginning of this video was going to be 270.3 million shares outstanding. And then you're going to arrive at these fair prices per share. So for the low end in 2021, $11.72. For the midpoint valuation, $14.79. And for the high valuation, $17.86. So based on these calculations, it looks like Achronix could be undervalued. But of course, don't trust me, verify me, always check what I'm doing, always check if the calculations are actually correct. And also keep in mind, we have been taking a look at assumptions. So we've taken a look at a certain revenue in 2025. We don't know for sure if this is going to happen. We applied a certain range of multiples to that revenue. Maybe that's going to be lower, maybe it's going to be higher. We don't know that either. So if you change one of these multiples, the entire calculation is going to change and your fair price per share is going to change as well. So let me know what you think about this company, about Achronix. Are you bullish? Are you bearish? Let me know in the comments. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye.